Hey, welcome to today's podcast episode of the Dojo Pod. We haven't done one of these in weeks. We've been all over the place. It's been absolutely insane, and the prices have been bouncing around in the same ranges they've been for months. So it's not like anything crazy new has happened on that front, but a ton of new stuff has happened on the DeFi front. And there's been some drama. There's been new yields. There's been new protocols. Fixed rate lending is becoming this sort of like burgeoning narrative. So I'm excited to jump in for sure. Before we do that, how are you doing?
I'm doing good. It feels like we're kind of like in this interesting moment where, there's a lot of stuff going on in crypto, like kind of in the, what would I say, like the regulatory or TradFi realm of things, like lots of, new pieces of regulation getting passed. Donald Trump continues to build out his crypto empire with lots of USD1 getting circulated all over the place, especially on Binance Smart Chain and other places as well. It sounds like World Liberty Financial is going to launch their token soon. We have people like Robinhood, who's now going to be doing tokenized stocks on an ETH-L2. There's kind of all these exciting and bullish narratives, and as you pointed out, it does feel a little bit like none of it's moved the price, and I sometimes there's like a wall of worry that we have to get over, and sometimes I think it's just seasonality. If these pieces of news were happening in like October, it would be pushing us up a lot higher, and I wonder if right now it's kind of like people are away on vacation or just kind of like a bit beat up. I feel like this cycle, a lot of people that I talk to in the space just feel like a little bit, black and blue, like with all the like chop up and down kind of thing. So I do wonder if that's a part of it as well. But yeah, Bitcoin looks pretty healthy and solid, I would say. ETH, it's pretty, fantastic stablecoin at $2,500. Occasionally it goes $200 above or $200 below, but pretty much a stablecoin at $2,500. And other, other majors kind of like are pretty beat up as well. But yeah, tell us a bit about USD1. I think I'm fascinated by it personally, but I'd love to see if there's any particular yield opportunities that you think are interesting.
So this is great. I talked to, what's his name? Was it David? No, maybe David. I talked to the founder of Solve recently, and I was asking about this. I was saying why in the world is USD1, which is a stablecoin minted by World Liberty Financial, which is like the Trump stablecoin, the Trump family, Eric Trump, also Corey from Dolomite, like they've sort of created this thing. It's like a Aave fork instance sort of deal, and they have their own stablecoin, USD1. Why in the world is that Binance aligned of all of the things to be aligned with? You would think it'd be more base chain aligned or Coinbase aligned or some sort of America First narrative going on there with the stablecoin. And what the response was, which is really interesting, was that I think it was a loan to Binance or some sort of deal to Binance, a multi-billion-dollar deal to Binance, all paid in USD1. And so now Binance has this USD1, and in order to circulate it, they're pushing it into the Binance Smart Chain or the BNB chain. I don't know if it's called the Binance Smart Chain. Maybe that's like dating me, but the BNB chain. And so all of this USD1 is flowing into there through Binance because Binance had this deal. I can't remember what the exact terms of the deal was. Maybe like they added collateral to World Liberty Financial and they got to mint a bunch. But nevertheless, Binance had a bunch, and so it's flowing into a BSC or Binance chain. And so you end up with things like this, and they want to incentivize it. And so they're willing to incentivize it at a low interest rate because they're holding it and they need to circulate it. And they also, like, USD1's trying to carve into the stablecoin hegemony. And so to do that, you need lower interest rates on borrowing it and then high incentives to lend it. So we end up with things like 16% to lend USD1, and then if you borrow, it's like 1.94, which is one of the cheapest stablecoins you can borrow out there. So this is on Euler. It's also on Lista DAO. Lista DAO is a really Binance aligned protocol. A new version of this app is, if I go to your website, just give me the newest version. If you go to Lista USD1 Vault, you can see you can mint. And so, you can not mint, you can borrow at 2.58 against all of these, well, I guess different borrow rates, but you can borrow at 3.38, which is really good to borrow against a PT. So you can borrow at 3% against a PT USDE. You can borrow against BTCB, SUSDE, Solve, USD, ASUSDF, which is, I think, is Cirrus USD. So it's everywhere on Binance, and it is surprising, but I should learn more about the details of the deal. But that's my short USD1 blurb.
I do know a lot of people who are using this as like a cheap place to borrow, on Lista or on Euler, and then going and doing other stuff, right? Like I think a pretty interesting strategy is like deposit Bitcoin, for example, borrow stables at 1%, and then go do something with them that's yielding more than 1%, which is obviously, relatively speaking, easy to do. And then, obviously it's like pretty appealing on that side. I didn't quite understand what you said about like USD1 and what backs it. In my head, I had thought that this was being backed by treasury bills.
Yeah, you're probably right. I think it's paper backed.
Yeah.
But they have some, the interview with the Solve guy isn't out yet, so I can't even go back and rewatch it.
Right.
But he explains the deal with World Liberty Financial. So
it is fascinating though. I really had thought that USD1 was going to be this like America First stablecoin as well. And it's just fascinating to see it become more aligned with kind of our Southeast Asian brethren who make up a large portion of DeFi.
CZ is Canadian. What are you talking about?
Well, that's true. I forget. Yeah, that's true. Vancouver-based, crypto startup, of course.
Exactly right. This is how he's trying to take over Canada, is through taking all of the big Canadian
US dollar hegemony in stable coins in Canada. Yeah, perfect.
That's right.
It makes a lot of sense. And Greenland too. I think Greenland might be a next target as well.
Yeah. Yeah, it really was confusing, and I know there's a reason for it. And it has something to do with they gave Binance billions of dollars of USD1 in return for X. I just forget what X was.
But like, where does the billions of dollars start in the beginning? I mean, maybe I know Justin Sun is also quite, World Liberty Financial, Donald Trump crypto empire aligned. So, maybe someone like him is the intermediary of all that. But like, it also doesn't quite make sense to me that World Liberty Financial would just have like billions of dollars of treasury-backed stables.
That they have some sort of deal with Binance where Binance they will pay Binance to circulate USD1 if Binance mints USD1 against T-bills. So if Binance brings in cash, right, they can then issue USD1 against that cash, which they put into T-bills, and then Binance says, because you've paid us X, we will help with the distribution of USD1. Right. And now they're doing a big distribution push.
That makes sense. For a second there, when you were saying World Liberty Financial has a deal with, you said Binance, but for some reason in my head, I thought you were going to say the Treasury Department and that they were just
minting it. That's crazy. It's a new CEP. Just you can mint
it's the
against whatever.
New dollar. Yeah, exactly. The way the dollar is issued now is going to be on chain with World Liberty Financial. But fascinating to see. I mean, like I legitimately mean so fascinating to see how all this stuff is
actually
working.
Playing out.
And yeah, I mean, like it is kind of interesting to think about. Like we can pull this up, but I mean, like there are futures contracts trading right now. Like for example, what's it called? Whales Market, I think, like is the World Liberty Financial token is trading. I was looking at it over the weekend, and I think it was trading at a $15 billion valuation.
Okay, but that's Whales Market.
Well, and it was also trading. I mean, to be fair,
is it on Avo?
All these places where it was trading are very small. So like 100% like like you can't put a lot of credence into these valuations, but like
Avo is typically a bit better. Let me see. Do they have it?
No. It's also trading on MEXC futures. That's a thing apparently. I don't use any of these platforms, but like it is interesting to kind of gawp at them a little bit. Here's the one for Whales Market, and then MEXC. Let's see here.
Whales has one of the cleanest UIs, and yet cannot get volume. Oh, $1 million of volume. That's pretty good. That's something.
No, I know. Yeah, it's not bad. And here's the MEXC one. So if you're looking at that Whales one, it's trading at 13 cents. That's a $13 billion valuation because there's 10 billion tokens. And on MEXC, it's trading at $16 billion, $16.5 billion valuation. Again, on like, for example, MEXC, there's been $2.5 million of volume. So it's like both a lot and very little at the same time.
Yeah.
Today there's only been less than $200,000 of volume. So like you can't really read into these numbers too much.
But you could hedge it. I mean, if you're willing to wait a while, and I don't know what the rates are like. I mean, on MEXC, is there funding? Because it's not live. There's no market price.
Yeah, I'm looking at it. It does not say that there is. I'm going to be very honest. I never use MEXC, so I'm like not with like their system.
See. Oh, open for trades. It looks like there's a pledge rate, which we've got to figure that out. Yeah. So I mean, at the very least, if you are the kind of person who likes to do on-chain, off-chain hedging or arbitrage, there is an arbitrage there. 16 cents against 13 cents is a pretty big arbitrage too. That's like what, 25% to close that. But
I will say,
who knows when the token's going to launch? But typically, these are signs that it's about to.
Exactly. Well, and there's also been a governance proposal on Wi-Fi or whatever it's called, that or not Wi-Fi, World Liberty Financial, Wolfi, that's going to make this thing live. Who knows how long that will take, right? And I really like whales for like giving us kind of this early information and a picture of what's going on. I think it's always fascinating, but they have had many issues with execution of these things, and sometimes it can feel very arbitrary the way they decide to like settle a market. And there's people within.
Typically for airdrops, I think the difference here, with a pre-token, is that it's not as risky, because as long as they know what the total circulating supply is, it's really just like a hurry up and wait, like put in your orders, and then like it should settle differently. With the points, I kind of understand why they got into a few sticky situations.
Yeah, fair enough.
So hopefully this is better. I am by no means a whales market shill, because we know many people who have been burnt by them, specifically on the point side of things. I do wish they were on AVO, because AVO is typically like a more, I don't know, a more tried and true pre-market, even though it also does not get a lot of volume.
I mean,
that's awesome. It's really cool.
The point that I want to make, though, which is fascinating to me, is, like the Trump meme coin is still worth $8.5 billion. According to Whales and Mexi, this thing is going to be worth, actually, the price on Mexi just pumped 17% in the time we've been talking. I hope that's not people listening to this thing, which is not live, and somehow pumping it. But yeah, like is worth somewhere between 13 and $20 billion. So it's just fascinating to see, a president who has, what could only be multiple $1 billion of interest in the crypto industry between all these different products.
Right.
So,
That's right. Yeah. Well, and his wife, his wife's token.
Yeah, what's Melania doing? Just real quick.
I don't know. I'm not even gonna look. I will say, so we recently ran a competition in the Dojo, the DeFi Dojo, where we had like $100,000 tickets competing. So people would have like $100,000 and they were stablecoin farming, and then we had a $10,000 competition. They had $10,000 and they were farming, and then we had a $1,000 competition. And the winners from the $1,000 competitions were unanimously delta neutral, like basis trade farmers or funding rate arbitragers who were doing meme coins on Solana. So they were like long spot some meme coin and then shorting that meme coin on various Solana exchanges. And they annualized 70% over the 2-month competition time span. So there's definitely meat on the bone on Solana for playing these meme coins in a stable coin-ish way, a delta neutral way. And so I like that a lot. That was really cool to see. And it gave me hope that there's still some like good juice out there.
That's fascinating.
And the meme coin meta is not necessarily totally value extractive for those who know how to play it.
Well, speaking of the meme coin meta, we've been seeing some kind of fascinating things coming out of the Solana side when it comes to like Pump.Fun. It seems like they're raising right now at a $4 billion valuation, which is amazingly big, and they're aiming to raise something like $600 million. And I think this is from the public. I've seen stuff that like potentially this is going live on like Gate.io and stuff like that, and other places. But it is fascinating to see. Like these kind of like very big launches. I actually was looking at some statistics, and from what I understand, they seem to actually be losing quite a bit of market share to Bonk, which launched some other, apologize for being kind of like a millennial boomer here. I'm not deep in the trenches. That's
coins. The one that, okay.
But yeah, that Bonk launched like a launch pad, and they've been kind of winning market share in terms of like more volume and a lot of like tokens, transitioning from being kind of in like the pre-launch to like officially launched side of things. So it is fascinating. And then also Polymarket has some interesting markets on when this thing is going to like go live, like when they're going to be launching. So it seems like very likely the token will be live by the end of the year. Currently Polymarket's quoting 83% chance it will go live before the end of this month, 96% chance it'll go live by the end of September, and a 99% live that the chance that the token will be live by the end of the year. So
yeah, but like look at the volume. Okay, actually, it's not that bad. So there's
500K. I mean, I don't know. I mean, I would say a lot of these markets are not very liquid, but like they do get used and like talked about quite a bit. So I think it's about as liquid as many other ones are. But it is interesting to see that we're going to have probably one of the bigger launches of the year. in pump.fun. I do hope that, you know, people that participate in this do well. If $4 billion is a amazingly high valuation, so like, you know, what would it have to go to for people to make kind of like a significant upside? I guess several multiples of that. It is possible. I mean, I guess Circle has, you know, done some crazy stuff. Maybe pump.fun will be the next one, but you know, they were like a very massive money printing machine. It'll be interesting to see.
Well, that's I mean, I don't want to get into the weeds of that because valuing it now is hard, and I haven't done any of the fundamental analysis to speak confidently on it. But my sense is that people don't like pump.fun anymore. Like it's lost favor, certainly in EVM world. I think people who are EVM maximalists love to point to pump.fun as the reason why Solana is not doing well, even though it is the reason why Solana even came back from the dead, in a large sense, I would say. And then people on Solana kind of like don't even talk about it. Like it exists. It was, you know, generating the vast majority, I think, MEV revenue for a lot of Solana.
Yep.
Like the associated meme coins, at least. But it's like the dirty little secret. And now, I mean, the meme coin meta has faded a lot. I think obviously it peaked with Trump coin, and then it was like, well, what can you do from there? There have been like one or two maybe meme coins that have done okay since then. I'm sure there's been more. I don't know. I'm not a meme coin maximalist. But there's also probably, or definitely been, tens of thousands, if not hundreds of thousands, if not millions, that have done nothing at all. Yep. And so people are going to keep launching these things. I do think that Pump probably takes some amount of money every single meme coin that's launched. So there could be some fundamental analysis that says like it's worth it. But you know, it's going to be, if it does do well, it's going to be the most hated Pump, I would say. No pun.
Well, they've also made, you know, hundreds of millions of dollars. I think almost $1 billion in fees.
They could use that for market making, but maybe they've just extracted it all. Who knows?
Yeah, who knows? This did just catch my eye, unrelated, but on this Polymarket thing, right in the middle of your screen there, it says market context, and you can have Grok tell you the context for this market. It's kind of an interesting feature to have, you know, like the Twitter AI contextualize things for you.
Well, Twitter said they were directly partnering with, and I think it was Polymarket, right? For their, or X, or whatever it is. There was some statement either by X or by Elon saying like, I think it was Polymarket is the official, what is Polymarket again? What's the phrase for it?
Prediction market.
Yeah, is the official prediction market of X. Why? Who knows? I don't know.
Fascinating. I mean,
yeah, there you go.
Elon also said something about, you know, fiat being not dead, or maybe dead, something like that. Dead, and that, like, you know, the America First Party, whatever, I can't remember what it's called. The America, what's it called? TAP. The America Party, something. Anyway, that they were going to be a Bitcoin party, which is also fascinating. You know, if we have a political party now that's like aligned with crypto and Bitcoin.
He wants to be the George Soros of a brand new party. Good for him. I hope I don't know, hope he's happy. I don't know. I don't really have a dog in that race. But so, okay, cool. Yeah, Pump probably going to launch their token soon. Wolfie probably going to launch their token soon. It should be interesting. I am not particularly Delta exposed to much more than Bitcoin and some like altcoins that I just, you know, I know the teams, I like the teams, so I'm holding their altcoin. Some of them are doing okay, but, you know, by and large, a lot of them have been struggling. I think, you know, the obvious standouts have been Hyperliquid. FFX has been doing pretty, FXN, which is FFX's coin. Syrup has gone like parabolic, which is, Syrup now. It was Maple, now it's Syrup. Kind of funny there for Binance, because I know they're so Canadian aligned. So Syrup has been doing really well, but a lot of these are pretty small market cap. So we should actually talk about Syrup's success at some point. I did want to mention like the elephant in the room, at least for today, which is Falcon. Have you been following the drama there?
I have. It seems to be one of these kind of like recent big Twitter dramas. We've been having people throwing snowballs at each other, and it's made me kind of take a closer view of like what's going on. But did it depeg pretty significantly? Is that what's
it did earlier? Because like the FUD came out, and I'm not sure this is the most liquid market. It says $9 million of liquidity, so this is at least a pretty liquid market. Depegged down to multiple percents at least. Like I think 2% was where it kind of like flash crashed and corrected to, and it's been climbing back up. Now it's down 1%. My understanding, I should talk about my whole understanding of this because it's pretty big. So like full disclosure, we were an ambassador for Falcon like up until very recently, and you know the team, very friendly team. They've shown us the attestation. So attestations basically, we're an external auditor. We'll look at all of their holdings and all of their wallets and say yes, they're over collateralized, and that was pretty good. But then Llama Risk came out with this report, right here. So this is like the report that's sort of generating all of the fear, I would say, where they basically show that you can mint so much USDF against some of these collateral types that could cause bad debt. For example, like the Dolo token, and this has nothing to do with the actual Dolo token or Dolomite. This just happens to be the example they used. And I talked to Corey about this, and he was like, "Why did they have to choose us? It has not like no one is doing this against the Dolo token. The Dolo token is not at risk. This is completely unrelated. But you could, basically, is what they're saying. Contractually, you could mint enough USDF against the Dolo token, which can cause like a potential risk vector where someone pumps the Dolo token, mints a bunch of USDF, and then if the Dolo token were to crash, it would crash through inefficient or like not enough liquidity to actually handle that liquidation, which could put a hole in SUSDF. Now, my understanding though is that all of the minting is institutional. So even though it is theoretically and logically possible for that to happen, USDF or Falcon would have to allow an institution to do that, effectively allow an institutional partner to be a bad actor. And that is much less likely than a decentralized bad actor who would have incentive to do that at like, an anonymous level. So, I dug into this and I thought, okay, well, what are the risks? I thought that it was likely that all of the collateral they held was like hedged. I don't think that is the case anymore. So that has given me a little bit of pause that USDF is effectively mintable against a bunch of different collaterals, like top 100 meme coins. Basically anything in the top 100 effectively qualifies to mint USDF against it. And so the issue is not that they actually have bad debt. I think 0x Law, he posted the thing on Twitter, which is like they're holding tens of millions of bad debt. And what he's actually saying is that they have the capacity to mint USDF, which could cause them bad debt. And because on their books, they have likely assets that, if liquidated, would cause bad debt because would be unliquidatable. Therefore, the debt they have, which is any USDF minted, is bad. Not that like they actually have a hole in their backing because they're fully over collateralized according to the attestations. And even he doesn't disagree with that. He says, yeah, like they are technically over collateralized. The issue is if any one of their collaterals flash crashes, there could be an issue. However, we don't actually know what they're over collateralized by. So to make that statement, I think was a little bit forward and maybe make a little bit presumptuous, but also 0x Law is brilliant and it's done a lot of good work in the DeFi space, especially on the auditing side and smart contract side. So that's kind of like where things stand. And as a result of this FUD, or as a result of this like Llama Risk report, the USDF itself has depegged by about 1%, causing people to sort of, fear for what might happen. However, it should be noted that USDF's backing is not at all affected by its peg. So it's backed by other collateral assets. So unless those collateral assets take damage, USDF's backing is unaffected. So I don't know if I want to say this, like, because it could be risky. I am relatively confident that the peg will return to normal over the next week or so. However, I do now have a lot more hesitance towards being like highly exposed to USDF as a result of realizing now that it's effectively a CDP. So it's a collateralized deposition stablecoin where you can mint USDF against any number of different collaterals at the institutional level, and we have no clarity on what that collateral is because it's kind of like behind this an anonymized wall that we only get attestations for that don't actually list the collateral types. All right, that was a big spiel. Hopefully it makes sense. That's my take from the story so far.
Yeah, I think that's good analysis, and I mean, it's an interesting project.
Here's a list of some of the collaterals that you could mint against.
Right. And basically, I think the way it works is like, they make these deals with, institutions, could be market makers, could be teams, could be funds, could be whoever, to take these different kind of tokens, put them into, some sort of custody solution, and then mint USDF against it. Some of these things are obviously highly liquid, like Bitcoin and ETH and Wrap Bitcoin. Some of them are not, right? Like you pointed out, Dolo, also Quai, whatever that thing's called, Trump coin.
Gee.
There's a lot of different things. Qui, yeah, that like could be much less liquid. And so like, it's fine. It really just depends like what LTVs that they're offering, what the liquidity looks like, the amount of open interest. There's a lot of kind of factors that could go into having a position minted against an asset like this, either be relatively safe and make sense, and also, not make any sense at all. And I think there is a lot of kind of operational risk that could go into it, like, being able to actively monitor a position, have enough caps, have enough kind of like downside protection for a position. I will say that the Falcon team are market makers. And so, they probably are quite competent in doing this type of work. I will say that, like their kind of parent company, DWF, has had a bit of a colorful history, in terms of like their involvement in different, altcoins and stuff. So I would suggest folks, go and kind of like look at this for themselves. Me personally, I did up until yesterday have exposure to USDF. There was a loop. They've had a lot of kind of really interesting loops where, their staked version of their asset is earning, anywhere from like 7 to 10+%. And you could borrow against it on different money markets like Morpho at a relatively low cost. And so, I had a position open on this. It was very yieldy and kind of like, especially with leverage, quite a interesting and good position. When I did see that, tweet come out from 0x Law and kind of like some of the discussion that was going on around it, I did close the position. And I did that because, in my experience, kind of in the DeFi space, when there's a lot of noise, FUD, movement around a certain product, it's always better to kind of, exit and reevaluate and see what's going on and decide if you want to re-enter it. It's like always fine to re-enter. If you get stuck in a position, it can be very hard to get out. And so, that's what I chose to do.
A good rule of thumb is like if you is almost the opposite of TradFi, which is like buy the rumor, sell the news. If you hear a rumor of FUD and you can exit at virtually no cost, then there's no reason not to. There's no
and that's what I'll say is actually the experience in exiting the position was fantastic. I mean, like I was just, I was looped up, to a very kind of significant degree. It took me probably 20 minutes to exit the position, through unstaking of the asset, which I was a little bit nervous about. Was it going to work? Was it going to be any delays? Was smooth. It was super easy to get out of the position. To be fair, I did that before this depeg happened. And so like that was my experience. Obviously others who are in this position have to like consider this 1% depeg right now. But like I will say that like when I was exiting the position, I did not have any issues. It was like very kind of, easy to exit. I will also say, for 0x Law, I really always appreciate, the researchers. I think, we really do need lots of people out there, whether it be 0x Laws, whether it be Zach XBTs, or the many other people who do kind of really rigorous and critical research in a space like DeFi. I think it's super important. And so I always take my hat off to those people. But I will say that in 0x Law's post, I think he was being a bit inflammatory. Like, I think in the first couple sentences of what he wrote, there was something like, Falcon has tens of millions of dollars of bad debt and is a scam, and then didn't really kind of go to like back that up. It was kind of like pointing to a previous report and, wasn't kind of very clear on that. From the research that I've looked at, I do think that there are risks when it comes to Falcon, but I don't think that that statement of tens of millions of dollars of bad debt and being a scam is a factual statement. And I would just like caution people like 0x Law in just that, like, when you're doing this kind of research, you don't want to kind of cloud the good warning or cloud the like good research that you're doing with those kind of statements that can be interpreted as being, not in good faith, I guess, essentially, right? Like 0x Law does run Steam protocol, which is in some way at least like competitive with Falcon in the kind of like strategies that they do, and like it being in the form of a synthetic stablecoin. And so, when I see strong statements like that without a lot of backing for them, and then also, like the intern account of like Stream saying just use Stream instead, it kind of delegitimizes what could be otherwise like a very clear message, and feels like potentially it could be used as like some sort of like marketing ploy or like, way to building attention around Steam protocol as well. I don't know if that's true. I also don't know if like the FUD is true or not true around Falcon, but I do think it's worthwhile everyone, researching it more. And I would just like encourage people like 0x Law to continue the good work and continue to do the research, but just do it in kind of like a measured and like, unbiased way that makes it easier for people to read and interpret and, get the information out of it and not use so much kind of like hyperbole, essentially. I don't know what your take on that is.
Yeah, it's effectively the same take, which is if there's bad rumblings, exit, especially if you can exit with virtually no cost, and then wait for the dust to settle. In this case, there are also some things that are like interesting if you're crazy high up the risk curve, but like typically when these things happen, there's opportunities to be had here. I think I already know actually that Falcon's going to release a statement sort of addressing the concerns. I hope this actually pushes them to make their books way more transparent. If they don't, I think they're going to lose a ton of TVL just because people won't be able to trust them anymore. So we'll see. But like right now, there's someone going crazy in the Discord saying like, I can't withdraw my USDC from Silo. This is your fault. Like looking at me. You used to work with Silo, and this was, by the way, we have worked with Silo for about half a year. But we did at one point. We were an investor for them. This Silo team is still a bunch of cool ads. So no shade to Silo guys. But basically, what they are in this USDC market for like Varla more. I think they're the curator for this market. They're lending USDC against people who are borrowing it against SUSDF. And because SUSDF has this like FUD right now, it's been max borrowed against to basically mitigate any potential losses on like an SUSDF depeg event. Because of that, they can't withdraw because all of the USDC that's been lent has been borrowed. So while they are getting 50% APR right now, they want to withdraw because they're scared. And I would say in this particular case, I am less worried about them. Not because, I'm not treating them with respect, but only because we've seen this sort of constantly where there will be a bank run, people run to exit, and people who stay get this sort of really high transitory APR for maybe a day, maybe just a few hours. Then sort of the fear calms down. People don't want to be borrowing at 50% APR, or they're probably borrowing at like 100% APR. The borrow cost is typically higher than the supply cost in almost all cases. And so they repay their debt and things settle. So I'm relatively confident that if you are in this market, you'll be fine. I hate to say that because, who knows what could happen. If USDF then like suddenly collapses because the attestations were all false and all the collateral then goes to zero, which I don't think is going to happen, then they could be left with like an unwithdrawable position. That's always the case when you're lending against different collateral. So on Silo, the whole purpose of Silo is to silo the risk. You choose which collaterals you lend against. You choose to be lending against SUSDF. You choose to be lending against whatever it is. If that market incurs bad debt, it does not affect any other Silo. So that is literally the use case of this particular protocol. So anyways, just looking at that, if you're watching this, well, probably by the time this is released, you won't have the ability to deposit into this. I hope by the time this is released, this has been mitigated, but goodness knows, it could be like the opposite. Yeah, I don't know. I think that they're going to release a statement. It's going to be hard to recover from this without having a higher level of transparency. As you mentioned, like 0x Law, he does have his own protocol, which is Stream, which is kind of a competitor. I don't know if it's really a competitor. They don't even mint stablecoins. They mint like vault shares against USD, Bitcoin, and ETH. I think I have it over here. So this is like 0x Law's own protocol. And for a moment, like this Stream retweeted the bad news about Falcon and said just use Stream. They removed that tweet because it would have been like, not good for us to publicly get into a fight with other protocols. It's typically always negative EV to do that. There's no reason that protocols should be publicly fighting. I think even Aave and Morpho don't do that much anymore. So who knows? Yeah, I think time will definitely be the final decider here. Typically markets overreact to bad news, and then the truth of the matter happens later on. There have been some notable exceptions like FTX and UST, where the people who were early to react were actually the right guys. But in this case, I think it's a totally different mechanism. There are attestations. They are over-collateralized. It's just that they're over-collateralized by things that people might not want exposure to, is the end of, is kind of like my, actually that's like my final statement on the thing.
Yeah, fair enough. Well, why don't we move on to talking about some actual yields? We've been, talking about politics, both in the real world and the DeFi land. What's going on in the cold hard yield, Stephen?
So much. So in DeFi world, well, actually, there's a few more updates. I did want to mention like FFX should be having shorts soon. I'm like eagerly awaiting this. I wanted to do like an update on this, but as far as I can tell, you can't short yet. But they did announce shorts. You can see I have my own positions open here. no funding being paid on that. So it's been a lot of fun to be in these, though I don't recommend taking leverage positions unless you're hedging them or unless you just want to do it for capital efficiency reasons. And you can always pay down the debt. But in terms of actual yields, I would say there was an interesting Bitcoin yield that popped up on RateX and Exponent for a while. It was like Fragometric BTC. So Fragometric is like a restaking protocol. And because of their points campaign, the Frag BTC was up to like 12% for a while, 12% fixed rate. You could lock that in. Now it's down to like 5%, 5.52%, which is neat. But I'd like to see this, like, man, I really wish that, and I think they are, that Solana would just copy EVMs, right? Get these PTs hyper composable, get them on Camino, get them on, MarginFi, get them anywhere. So you can loop and leverage these PTs. I understand like you need deep liquidity for the PT. I think Exponent has now surpassed RateX. So Exponent has become the biggest rate swapping market on Solana. That's Exponent. And they also have Frag BTC. But of course, with more liquidity tends to come less competitive rates. So, no, it's Frag Sol. So Frag Sol is at 9%, which is nice. And you can actually loop this Frag Sol up on Camino, which is kind of cool. So if you're like a Solana maxi, that's one of the best opportunities out there. But they have Frag BTC at 5% sort of fixed, which is cool. We talked to a team called Neutral yesterday. They're going to launch, and they're doing something really interesting. This is not really like a yield that we can participate in because it's not like mainnet's not live yet. But I do think it's worth following and like keeping your eyes on. Basically here, what they do is they buy tokens at a discount OTC and then hedge that exposure on perps and then wait for that arbitrage to close as their OTC deal expires. And so they're doing that with roughly 20% of their portfolio. The other 80% is in things like T-bills and maybe like SUSDE or something. And if they could actually achieve like 20% APR in their stablecoin using these OTC deal arbitrage, that would be a really cool new product. So I'm watching it. I don't know if this number is correct. I also know like they're subsidizing this with like their airdrop a little bit. But anyways, like definitely follow that. And then there's another one to follow, which is like TermMax. So TermMax has kind of finally gotten some TVL, which excites me. They do also have like this pre-mining campaign for TMX. But the reason why I like TermMax is because they've entered into this meta narrative of fixed rate loans. I think this narrative is going to blow up. Morpho V2 is about to do it. I don't know when Morpho V2 is launching, but I am personally very excited for this. And the next thing I'm going to say about Morpho is actually also super exciting. But basically, you can come over here and you can collateralize, like, for example, PTS level, right, that expires in September. And I think the APR and PTS level is something like 7 or 8%. We can go look right now. Let's go Pendle, Markets, S level. So it's at 7.5. So there is an arbitrage between the fixed rate collateral APR and the fixed rate borrow cost of about 70 bips, right? Or no, 7.7. It's about 7, what was it, 7.5? Man, I already forgot. 7.5. Yeah. So that's right, about 70 bips. You can then leverage this up and then lock in that fixed rate ROI because you're fixed rate on the collateral because the PT, you're fixed rate on the borrow because it's a fixed rate loan. And so whatever your ROI is not going to change. Now, of course, there's entrance costs and exit costs, but you can calculate those as well. So I think that like this whole narrative is going to be really great. I'm excited for it. What was the team we talked to yesterday that's also going to be doing fixed term loans?
Size Credit is another.
Size Credit, yeah. So Size Credit. Go ahead.
Yep. Oh, I was going to say that their model is also pretty interesting, but it sounds like you're going to say that as well. Go ahead.
Yeah, I was going to say, but they're also like, they haven't done their big TVL push yet. But yeah, Size Credit is another one to watch sort of in this space of fixed rate loans. And so, I think this, and also recently they got USDC against WSRUSD. So this is reservoirs like staked RUSD, which typically gets like 6.2% plus season 2 points. So here you can lock in the borrow cost. You can't lock in the collateral cost or collateral yield because wrap staked USR does have a semi-variable yield on the collateral. And I don't know, I am excited for this. And you can even go over to, leverage. So leverage allows you to like one click open these positions. By the way, we have no affiliation to TermX. I just think it's cool. So here's the PTSUSDE. You can leverage it, but if it expires in August, you can effectively get 44.75% locked in. The big issue with TermX that I have is it just does not have enough liquidity. There's only 500K to borrow. So if you were doing 7x leverage, that basically means, 6 or 530 divided by 6, which is I don't know, something like 9-ish, right? So like 900, is that right? Yeah. So like 90K max leveraged would be the most principal you could put in, 90K, which is just not a lot. It's just, it's not a huge position. It's like, 9 people with 10K or one person with 90K, less than one person with 100K who wants to leverage this up. So they don't have enough liquidity, but it's a really cool protocol, and I really want them to succeed because I want to be able to use it sort of as they grow with TVL, and I want them to get Lindy. Because also, like, the fixed rate lends are composable. Like, you get FT tokens for lending against them. So there's a whole bunch of cool stuff that could happen there. New DeFi Legos, which I always get excited about. So that's kind of like excitement. I know there's no actionable, so maybe it's kind of boring for you guys. The actionable stuff, though, is with Pendle and Morpho. So Pendle and Morpho recently released LP collateral. Now, this is kind of a big deal. There's not a ton of liquidity. I will say, like, that's kind of the frustrator here, or the thing that stifles growth, but it just launched. And I think that it's going to be a narrative that people are going to get excited about because, for example, like PT, LP, yeah, this is the one, LP, SUSDE. This one is, I think, the one I was looking at. So SUSDE has like we can look. So the LP for SUSDE September has, the actual base APY is 6.16. So if you look at the headline number, it's going to be like the max boost. But if you look at the bottom number, it's basically what you're getting. So you're getting 6.16% APY on the pool. So this is like the Pendle LP position. You can then take that LP and leverage it 10x because 91.5 LTV is actually like 12 point whatever, but I always do 10. So that's 10 times 6, we'll just say, which is 60, minus 9 times 3, which is 24. So 60 minus 24 is 36. You're getting a 36% net APY, which is already really good for stablecoins. Plus, this is the crazy part, plus you're getting 30x sats on the LP. So now you're getting 300x sats on top of this, which makes it dramatically different from like leveraging a PT, where you're forgoing all the points. So here are the benefits to DeFi as a whole, which I think people are probably less interested in, which is now we're going to start seeing liquidity get a lot deeper on Pendle because people can leverage it on Morpho. That's a massive benefit to people who are like trading Pendle markets, trying to exit Pendle markets before expiry, all that kind of stuff. This is a massive benefit to Pendle. Also, Pendle's TVL growth Pendle's TVL growth should be substantial from these markets, but of course not everyone's going to be leveraging LPs, but now you can. And so you can get tons of points. You can get a positive net APR. What I want to see, obviously, is deeper liquidity because 750K liquidity is just not a lot. None of these one of them has, here's another LP, SUSD, September. This is the same thing. Why is this so much better than this one? Is there a difference here? So borrowing USDT versus borrowing USDC. This is way better. This is like $1 jillion of APR. So this is MEV curating this one. No one has borrowed yet, which is why the borrow cost is so low. But I mean, you're literally just getting almost the whole net APY of 60%. So you're basically getting 60% here. But no one's borrowed yet. So obviously, as soon as people borrows come in, the interest rate's going to go higher. And if you wanted to predict that, what you would do is like go into the market and look at the IRM. Now, pop quiz. Mara, do you know what IRM stands for?
Is that the instantaneous? Yeah, there we go. The instantaneous borrow rate. I knew it was like
It's actually the interest rate model. So I threw a little bit of curveball at you by showing you that on accident. So the interest rate model is kind of what you want to look at. Like so when you and I talk, we call it the kink rate because that's like the layman's term. I think it was DK Nugo who used IRM recently. I was like, oh yeah, that makes sense. That's like the name for the thing that we always call kink rate. But the IRM will show you what happens. So, like right now, there's 0% utilization. So you're at the very, very bottom. But the target is basically what they're going to end up at typically. We've also seen a lot of these go over the target. So if the collateral is 6% and they go to the target is 3%. So it should look a lot like that last market we saw. So I still think it's probably going to end up somewhere around 30% net for the leverage, which is fantastic. And then 300x sats, which you could technically value by taking the difference of the expected yield, the actual yield of SUSDE, and the IY, which builds in that SAT premium, and then multiplying that by 10. So, it's a lot of complicated math, but go ahead.
There's a lot of stuff here, but I'm pretty excited about this. One, because anything that makes, Pendle markets more liquid, I'm a big fan of. Like, if you are moving around in Pendle at size, some of the markets are highly liquid and easy to move in and out of. Others, you really need to set limit orders. And I think that's something I've talked a lot about in the past, but hopefully this will make the markets more liquid, which will make PTs easier to move in and out of, so that's a great thing. I do, have a few kind of questions on how this is going to work. Pendle APRs for LPs tend to be relatively low. If we see even more dilution on that, it might mean that, the APRs do, decrease quite a bit. Although I do think kind of one of the big advantages of this compared to like levering up a PT instead like levering up like the LP is that it is relatively easy to get in and out of it, right? You can't have a period where there's like some level of impermanent loss,
right?
Where, there's more people, let's say buying a PT or buying a YT. Also, when you're entering and exiting a position, you need to be very careful like what you're clicking on in terms of like, do you want a slippage free transaction? Do you want to get some of the YTs? Do you want to just like, put it all into the LP? There's a lot that actually kind of goes into it. But if you are a decent operator when it comes to Pendle LPs, you can do it, moving in and out of these positions quite liquidly, like more liquid than like a PT would be.
Yeah.
And so even if you do get into a place where you enter and it's some relatively high APR and then the APR decreases or the borrow cost increases, something like that, it's relatively easy to get out of it, much more so than a PT position. So I do like this. I do think this is interesting. I'm glad that they're doing it. I think that this will overall kind of like help the Pendle ecosystem. But like with anything like this, especially when it's new, it's always worthwhile kind of keeping a close eye on it, and execution kind of is king. I'm also going to be interested to see if they do, allow for any of the boosting, right? Like the APRs that you're showing here on the right-hand side do include a boost where you have to either have the Pendle kind of like, to get the full APR there, or be using one of those like liquid locker platforms like a Magpie or Equilibria or whatever those things are called. And I don't think those are supported on the Morpho side. So you are getting the non-boosted rate when it comes to this. But if you highlight over one of those APRs there, you can actually see what it would be here. So like, for example, they're quoting 18.82%, but in fact, you would be getting something closer to that 13% base rate.
Exactly right.
So worthwhile to kind of keep an eye on that as well.
But I was also looking at LPs, I think months ago, and thinking, oh man, most of these LPs are single digits unless you're getting the boost. Now it seems like a lot of these have become a little bit more competitive and are around the 10% range, which is like the same thing as the PT rate. So if you're getting around the PT rate, but you're also benefiting from the points, it seems like a no-brainer to go with the LP, with the caveat that there's no liquidity to borrow. So like, I think this is a brand new narrative. As it expands, we should see some really interesting opportunities. I do think that obviously as anything gets a lot more TVL, yields compress. So I do anticipate a lot of these yields to go back down to what we used to see, which is like single digit APRs. Curators are going to have a blast with this. I think, Gauntlet, MEV, Steakhouse, they're all going to be very well positioned here and they're going to be like the hidden beneficiary of this brand new narrative. So yeah, I'm stoked. I think that's like the biggest update of the day really is this particular new yield narrative. And Silo had this first. So like Silo, to their credit, was one of the first to allow for leveraged LPs. I mean, technically, I think it was LoopFi, which built products around this, but they just had not been able to get market share. And then, got a little bit of bad press because, I'm not even going to go into it. But so, yeah, I'm very excited for this. A few last things. I know we're already over time because we've just been yapping out here. I wanted to again, no affiliation. I just wanted to highlight this very cool tool that I've been using a lot lately, which is vaults.fyi. And the reason why I use them is because they're one of the best sources of truth for the actual underlying APR for a lot of products. So you can go here and see what the average APY has been, APY in this case, of all of these products and sort of say, okay, well, that's great because the APY you see on the front end for many things is not always accurate. So instead, what Vaults does is they pull the APYs at the contract level and then show you what those actually are. So this has been a really good research tool. It's also been a really good place. So Syrup, for example, is one where I will go here instead of their front end to see what the actual current APY is, and then use that for all of my calculations. So that's been a lot of fun. And yeah, just shout out to the Vaults team for creating a cool product. They also technically have their own vaults. So
Wait, just real quick there. A shout out to our friends over at the Tau Labs.
Oh yeah,
Tau Yield
18%.
Bond ETF. The 7-day average APR is 18.93%. That's pretty fantastic. So, shout out to those boys. That's a
Pixel,
great stablecoin.
if you're watching this.
Yeah.
The other thing is they have their own vaults. Now, I have not really vetted this. I'm not going to talk about it at all, but they do just allow you to deposit from their own front end. And I don't know what the benefit is. I don't know if they're going to have their own token. There's obviously anything that allows you to deposit probably will at some point have its own token. But there you go. So they also have that going on. And then, I mean, kind of finally, I wanted to just re-highlight things like Felix and things like FFX, like Liquidity, which allow you to choose your own borrow rate. I think this narrative is kind of still underappreciated. So here you can borrow against ETH, Repsec ETH, RETH, or maybe more excitingly, I don't have my VPN on, you can borrow against Hype, the actual Hype token, or even BTC at the borrow rate that you choose. Now, of course, the lower the borrow rate, the lower the fixed rate borrow rate you choose, the more likely you are to get redeemed. But if you want to play the counter to that, you could deposit into the stability pool. And we know people who have made massive ROIs from liquidated Hype. So they got crazy discounted Hype, which a lot of people want to be exposed to anyways. And it's just been been cool to see this secondary. It's kind of related to that fixed rate, fixed day borrow cost thing. But in this case, it's fixed rate, no fixed. You can have that fixed rate forever in perpetuity as long as you don't get redeemed. So there's a lot going on in DeFi. That's why I was saying there's so many updates, there's so many cool things being built that I'm particularly excited and have renewed energy. But we'll leave it there because I know we're already so far over. And thank you guys for watching. Go check out anything. There's so many cool things in DeFi. And yeah, if you want to be on the cutting, so as this USDF story was breaking, I will say the DeFi Dojo was the best source of research there. Everyone was looking into it. They were finding every single bit of information. Xerox Law was actually in there as well, talking and describing his case. And the DeFi Dojo was interfacing with him as well. So it's a great place. Link probably in the comments or descriptions to join that. And have a wonderful rest of your